Well, it wasn't so much this week, Sarah. It really started last week. There was a couple indicators that confirmed people's views that there was double buying, triple buying ahead of the last peak season. That means inventories may reset a little bit higher at the same time when consumer demand starts to downshift a little bit. And you talked about food prices earlier in the segment. You have higher gas prices. People are spending more on services than goods. And if inventories reset at the same time where the consumer wallet pendulum starts to shift back towards services, there's a fear that that's going to weigh on freight demand, especially coming off the best 18-month period in several decades.
Yeah, people are talking about a freight recession. Is that something you're seeing and hearing from these companies?
Yeah, I think it's a little early to throw out the R word. We're coming from a very elevated level, and I think we need to put that into perspective. Truck pricing, ex-fuel prices are down 30%. Which in 1 month is a very big move, but it's far from recessionary levels. And as long as we don't go into a broader economic recession, even as the pendulum shifts a little bit and inventories reset a little bit higher, I think it's a little strong to be calling for a recession, because the other side of the equation is there's the demand side and there's the supply side. In the trucking market specifically, there's very low barriers to entry. And every other prior strong cycle has been ruined by all these dollars that the truckers been making going into new capacity. They can't do that now because the OEMs don't have the chips, just like the automakers don't have the chips. So ordering of new capacity has been very low, well below replacement levels. If the demand side starts to flash a warning yellow flag, it means you probably don't get that rush to add to new capacity too, which may not take it as low as prior down cycles.
There's some good individual stock stories here within the transports, UPS becoming sort of a battleground. I know you don't cover it, but you do, I think, prefer the rails over the trucking stocks. Why?
I do. A couple reasons. First of all, the rails have commodity exposure that the trucking stocks don't. So everything that's going on in Eastern Europe right now and has that how that translates into Western Europe with coal, with ag, even with crude by rail, that's going to be beneficial to the rails. The other thing is the rails have very good pricing power that'll carry them through the back half of this year, and they won't be immune to a drop in consumer spending, but it just hits their bottom line a lot less. So for those reasons, we think the rails are a very good safe haven. They're pretty good inflation hedges, and on a relative basis, we think they'll do much better than a trucking market, especially as pricing started to turn over.
So what do you see there in terms of valuations, given the slide we've seen in the group, and how does that setup look into earnings?
Yeah, it's a really interesting question. So the rails look they did look pretty expensive about a week and a half ago relative to the broader market. I think you have to look at the rails relative to the S&P. And when we put out our cautious industry outlook last Friday, the rails were trading at over 20 times, or the market was trading closer to 18. They've pulled back this week too. The selling has been completely indiscriminate. So the rails are trading, the East Coast guys, Norfolk Southern, CSX, which are two of our top picks, are now trading at roughly 17 times next year's earnings. They're trading at a market discount at a time where we think that volumes will accelerate in the back half of the year. So I think from the rails, they look pretty good. On the trucking side, the TL guys trade very cheaply. The lowest multiples they've ever traded at, single digits in some regards. But I don't think valuation really matters on the trucking side. We're such a high on market spot pricing that this is one of those segments where when pricing momentum is working against you, there's almost no floor on valuation. Nobody wants to catch the falling knife or be the last one holding the bag. So we need to have line of sight on the pricing deceleration slowing and getting closer to a bottom. And that's when you start to bottom pick some of these trucking guys.